For analysis now of world markets and hedge fund returns, we are joined by Giordana Mosseri, Managing Director of Hedge Funds at Clarity Capital. Well, thank you very much for being with us today.
Thank you for inviting me. Good afternoon.
Well, how are the crises that we've seen in China and also in Greece impacting hedge fund returns?
Okay, that's a good question. We should start saying that the hedge fund industry has performed very well in the first semester. Since 2009, hedge funds haven't performed so well, so it has been a very successful first semester. And compared to the Standard & Poor's, June has been tricky. Of course, market collapsed, and as you mentioned, Greece and China has been a big driver of losses for the hedge fund industry. Not all the hedge fund has exposure to those countries, and especially Europe or China. However, we had a sell-off mood, and which impacted all the hedge fund. Despite the fact the hedge fund tends to be with very low net exposure, so limiting the risk and limiting the exposure to the market, anyhow, they keep taking some risk. And so we saw a general performance for the hedge fund industry of minus 1.3.
And what do you think they're impacted at the most, China or Greece?
Both. We had a lot of global hedge funds that started taking more exposure to Europe at the beginning of 2015, given the fact that the European Central Bank started the quantitative easing policy, so they injected a lot of liquidity into the market, and we saw the record performance for the European market up to April of up 20%. Mm-hmm. So extremely good environment for investment into Europe. So the global hedge fund exposure shifted to Europe, taking advantage of this big movement.
So that added liquidity almost offset what was happening in Greece in terms of Europe?
Yes. So this has been till April, May. In recent times, we saw that hedge funds are reducing exposure since it's more a political issue rather than a macro issue. And so we know the hedge fund tends to be today more cautious than the past. So back in May, they start cutting the exposure also because they want to crystallize the gain that they made in the first part of the year. Regarding China, we have selected hedge funds that are working in Asia. So we have a dedicated Chinese fund that, of course, lost money in June. Of course, they made also good money in April and May. So overall, the year-to-date performance is still very good. However, there is a lot of volatility.
All right. Well, speaking of volatility, now let's talk about Puerto Rico.
So Puerto Rico, another big issue. We know that the bulk of hedge funds are based in the U.S. We know that the majority of hedge funds also are investing in Puerto Rico, and a lot of mutual funds are investing, wealth people are investing in Puerto Rico. Has been a very interesting investment opportunity for years. Now we know that the governor of Puerto Rico said that they cannot pay anymore the debt, so we will see what happens. However, the hedge fund industry is already taking legal action in order to protect their gains and their position. We see that a lot of hedge funds have a broad exposure into Puerto Rico.
And just real fast, how are the hedge funds reacting to these crises?
So generally speaking, I said the hedge fund industry is doing very well this year. So they are cutting risk in the portfolio. They are crystallizing gains. Generally speaking, since the big investors today in the hedge fund industry are pension funds, endowments, institutions, so they are less willing to take risk. So basically, the hedge fund industry is cutting risk and buy on cheap levels.
Well, thank you very much for your expert analysis. We do very much appreciate it here at I-24 News. That wraps up our show today. Do stay tuned tomorrow, same time, same place from the Job Report in Tel Aviv. I'm Natalie Ehrlich. Thank you for watching.